Hello everyone and welcome to ICM's midday session. We had economic indicators that came out starting in the Asian session, mainly Chinese trade balance, which showed a huge surplus of $74.42 billion. The exports jumped by 21.1%, just confirming the recovery of the Chinese economy. Also from Germany, we had industrial production for October, which expanded by 3.2%. And the Sentex investor confidence in Eurozone rose to negative 2.7 from negative 8.3 for December. This is just signaling some positive expectations for the month to come. So these were the main economic indicators that came out. Still, the Brexit issue is still weighing on the market. We're seeing the British pound tumbling sharp today against other currencies, and especially the US dollar. Still, there is no breakthrough for any of the matters that we're still holding. So this is all for Brexit, and we're seeing the impact on the British pound. The euro dollar. Let's go start with the technical analysis. The euro dollar just had a correction from 21.7, which was its highest level in a while. So we had a possible channel that we were trading at the top of 2170. So and then the market had a correction towards almost 2078, which is the 100-hour exponential moving average. But still, if this is going to persist in the market, maybe we're gonna see another move lower. So this is just the channel that I'm talking about. So exactly, you can see how the market was trading clearly, despite all the indicators that came out, what happened in the market. But the rally was the market was discounting everything, and the market, and if you were applying technical analysis or you're just going for a classical technical, you were able to just at least have some insight where the market could be going. So this is the top that was reached, exactly the top 1, 2, 3, exactly the fourth point. And here we had a double top formation. This double top formation just broke lower, and we're now witnessing correction. You can use the Fibonacci retracement just to set where are the possible retracement levels. So you can see here we retraced exactly to 38.2%, which is also previously the 2080 level was previously a key level. So now we're trading between the 23.6 and 38.2. A further deterioration or a weakness could lead to the 200-hour exponential moving average, which also coinciding with the previous bottom of all. So these are the key levels on the downside. While any move back higher above the previous high of 2140 could lead to another retest of 2170 throughout the day. I would just like to remind you that on Thursday we had the European Central Bank monetary policy meeting, which is just one of the top events for the week, and everyone is waiting how the European Central Bank will calibrate the policy to suit the latest economic challenges. The British pound against the United States dollar, so we're seeing a sharp drop, is clear move lower. If we just also go for channels, we can see that the market exactly was reversing from the top of the channel. So you see 1, 2, 3, 4, and then the market reversed lower, and now we're trading near the previous zones. Almost was the low for the day 32.23. And now we're back almost 32.60. Still, any headlines on the Brexit will continue to weigh on the currency. 32.85 is now a key level. Like this area, 32.85 to 33.20. It's just it was a key support area previously. So here it was a resistance and then support. So watch out for possible cap to any move higher on almost near around 33. So this is for the British pound against the dollar. Where could be the coming levels if we're just assuming the market is going to continue to fall? So you have a previous support almost 32, and then another clear one at 131. So this is just if we have a bigger magnitude in the fall. So just further weakness in the market. These could be the possible levels. Also, you can pinpoint the previous stop here, which could turn into the resistance here, almost 31.70, which could turn into support. So also note this level here. So this is for the British pound. Moving back above 33.20 is just important for bulls to start retaking control after this fall. The dollar against the Japanese yen, we're still trading inside the certain range. The jobs report on Friday failed to just add the volatility in the market, push the pair higher, or just force it to break out of this consolidation zone. So we're still trading inside the same range, and we can just still highlight the same extreme levels for the dollar against the Japanese yen. The dollar against the Swiss franc. So following this sharp decline, we had a retracement towards the 100-hour exponential moving average exactly, which is also, if you just draw the Fibonacci, it's almost the 23.6 level, and we're currently trading just in a correction. So what could be done here, since we're just having a correction, no signs of a clear reversal yet, so traders would be selling rallies on dollar against the Swiss franc. However, a push higher above the 100-hour exponential moving average could trigger another move towards 50% retracement, which is almost 89.90. It was previously key support, and currently it coincides with the 200-hour exponential moving average. The Australian dollar against the United States dollar, also we're having a clear fall. So mainly the dollar is just regaining strength against others. 73.40 continues to be a key target, key support. So watch out for any break below this level. You can just highlight the trend line that we're almost currently trading at. So this is for the Australian dollar. In order to regain some strength, we need to trade back above 74.10, 74.15, which was previously also the previous stop ahead of recording the 74.45 top, the recent one. The New Zealand dollar against the United States dollar. So also we had a bigger correction towards the 70 psychological level that we've been highlighting for a while. So you can hear it was resistance and then support, and now it fell exactly towards this zone. We can just note again the bigger consolidation zone between 70.85 and 71 top. And at the bottom, the 70 it's a psychological level. Definitely, it's a full round number, and we can go for the previous stops, mainly near almost 69.60 or even lower towards 69.40. So this area here that we've been highlighting as resistance previously in the market was just facing some pressure to move above it. It could be forming some buying orders. The US dollar against the Canadian dollar. We had the fall exactly towards its lowest levels in a couple of years. So we're going back to the weekly chart and using the previous bottoms in order to set the possible resistance, and still the line is still showing from Friday's session. So the market exactly rebounded from this bottom. So this is just the key level to watch out for any break below it. Any break could lead to another drop towards, on a bigger extent, towards 26.35. If we just go back to the hourly chart, you can just set here the previous support or the consolidation zone that we're trading at as a key possible resistance, 28.45, and then the 100-hour exponential moving average. Maybe if we just take some time for the market to rebound, the 100-hour exponential moving average could drop here, and then maybe we could witness some sideways move until the market have a bigger driver for a directional move. Gold prices capped by 1850, 1848 zone. So it's just the previous, you can see the previous support acted as resistance, and now we're trading inside the bigger range. There's a smaller, like for the full range, it's just 1764 to 1850, but you can just dissect it to smaller ranges by just denoting the tops and bottoms. So this is almost what we're trading at, 1817 to 1820. This is the upper range of the bigger range that we're currently trading at. So watch out for any breakouts out of this zone. If we're going to witness a bit of lessening volatility, maybe we could be trading in a range for a while until we have some drivers building up. Silver, it's just clearer. We were just assuming that we had an ascending triangle or a continuation triangle, but this didn't play out. Especially that the jobs report, it had a slight surprise, which is the increase in average hourly earnings, which is just alarming on the future of inflation. So this could just force the Fed to raise interest rates in the future ahead of time. So this is just what's supporting the dollar, supporting the yields for a while. But definitely we need more data, which should be coming later this week with the CPI from the United States coming out on Friday. So on the bigger picture, we're just trading inside this consolidation zone. You can just highlight 2350 to 2430, almost this range that we're currently trading at. Moving to oil, which had higher high following the OPEC Plus meeting. However, we're witnessing a move lower again. So watch out on the bigger picture for if the outlook worsens, maybe we could be forming a double top formation. So this level here remains a key level on the bigger picture, 43.87. While on the smaller ones, you can just trade these moving averages. We were finding support near the 100-hour exchange moving average. A drop below it could just lead to a retest to the 200. Here you can just draw a trend line, also combining the previous stops. So any break above the trend line could just push the prices higher again towards its recent peak. The Dow Jones. So it's still, this is from Friday. You can see here the trend line. We were able to break below this trend line. The jobs report pushed the Dow towards the trend line, combining the previous stops. This is just as it trades chances of further fiscal stimulus. So this is just supported the market. But today, with risk-off sentiment just playing in, we're seeing a bit of a pullback in indices. So if you just have also a bigger assessment of what's happening, you can just draw. So we're almost at this trend line here. So there's a channel that we're currently trading at, and we are at the bottom of this channel. So if you just do it like way, so on the bigger picture, there's this formation happening, and here on this smaller one, we're just trading inside this channel here, sideways up, and now we had a bigger correction. So we had an impulsive move, impulsive, corrective, and now we're having these these corrective moves lower. So we're just stuck inside this range, awaiting some fresh drivers. Maybe it could pressure the prices lower towards the bottom bound of the range. So you can just trade the range until we have a clear breakout. This is all for today's session. Ahead of the session, we have the IVPMI from Canada to come out. All the information, news, analysis, and opinions mentioned in this live session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for today. We should